Okay. So today is 12th September, I think. Now, we have started the valuation of goodwill, first part. Um, we have also solved a question. No, no, we have not solved any question. Okay. So let's complete the goodwill today. Uh, we have some extra time today. So first, there are some topic left in the goodwill part. We have completed the formula of goodwill, average number of your purchase. Okay. One part is future maintainable profit. Future maintainable
Are you
profit.
sharing your screen?
Yes.
It's not visible.
Now it is visible.
Yes, sir.
Okay. Future maintainable profit means generally for calculation of average profit, there are 2-3 years profit given in the quotient. My voice is okay or is it slow?
No, it's fine.
Okay. Because the student I'm taking class with just now, he told me, sir, your voice is very slow, so I'm not able to hear. Hello,
Good
Abdullah.
evening, sir.
You joined on time. That's very rare.
सर बेइज्जती मत करिए यार.
Uh, I'm telling lie.
No, I mean you're not telling lie, but actually I was using Instagram, so yeah, I joined early today.
So you're using Instagram. That's why you joined earlier today.
Yeah, I was talking to my cousin, and I also had the link on this device. So yeah.
Yeah. And generally, what you are doing in the previous classes that you are not able to join on time.
Generally, it's usually like that that I'm not available itself, or I wake up late, or my mom informs me a little bit late. So yeah, these three reasons, I guess.
Okay, so there can be like 2-3 years, 4 years profit can be given. I'm just taking example for 3 years. Okay, so generally, if you have to calculate average, either by simple average or weighted average, there will be 2, 3, 4, 5 years profit will be given, and you have to calculate average on the basis of that. But in some of the question, you will find like information which is some additional information that you have to adjust in the profit, like abnormal profit, abnormal loss, because the profit which cannot be continued in the future is not included in calculation of goodwill. You have to remember this. In goodwill, what is the definition? The actually number of your purchase that we have discussed in the previous class. I told you that it is the number of years for which profit can be maintained. Yes. So profit which can be maintained, we have to take only that profit. If in any year there is any abnormal profit, let's say by sale of any assets. Okay. So if we are selling the assets, we are making the profit. Is this profit will continue in the next year also? If we are selling the asset, any asset, okay, and we have earned some profit on that asset, okay, so this profit will continue in the next year also, means in the next year we also sell any asset?
No.
No. So it will not happen. In the same way, there are some abnormal expenses or loss, like loss by fire. If in current year there is loss by fire, can we expect that this loss by fire will happen again in the next 2-3 years? No. So it means the profit or loss, which is not regular. which cannot be maintained, okay, will not be included. If any profit or loss is already adjusted in this, then we have to reverse that. Means any profit that is added before will be deducted, or any loss which is subtracted before will be added now. So profit we have written, then we will add any abnormal expenses or loss. So it is added. Then any future expected income, regular future expected income. Sometime it will write in the question that this income will be continued after this year. So that is future expected profit that will be added. Then after adding these things, we have to deduct some item like abnormal profit will be deducted. And future expected expenses will be deducted. So I'm doing it in 1 year only, but it can be given in all the years. So this is your future maintainable profit. Tell me if you have any doubt here, any confusion.
Sir, is it the same as super profit?
No. Super profit is a different. This is future maintainable profit. It is part of profit calculation, average calculation.
Okay, sir.
The average profit that we have calculated here, simple average and weighted average. In this, what profit will be used? It is a step before that, future maintainable profit. If there is any adjustment, then first we will do the adjustment, then calculate average. Okay. Done. Have you taken the screenshot?
Yes, sir.
Okay. Now see this question. Okay, in first question, it is very simple. Goodwill is to be valued at 3 years purchase of 4-year average profit. So average profit will be calculated for 4 years and 3 years purchase. So last 4-year profit is given 12,000, 18,000, 16,000, 14,000. We will calculate the average of these and then multiply it with 3. That is the answer. Simple, very simple question. But see the question number 3. A, B are partners sharing profit in the ratio 3:2. they decide, actually this is the admission part, but we need to only calculate goodwill. So up to this point, like C will be given 2/5 share, we don't have to do anything with that. So goodwill of the firm will be valued at 2 years purchase of 3 years normal average profit. This is normal average profit, future maintainable profit, same thing. So normal average profit of the firm. Profit of the previous 3 years ended 31st March where profit 30,000 after debiting loss of stock by fire 40,000. Then 2015 loss 80,000 includes voluntary retirement compensation paid 1,10,000, and 2014 profit 1,10,000 including a profit of 30,000 on sale of fixed assets. So first we will calculate future maintainable profit in this question. Question number 3, working note number 1, future maintainable profit. 14, 15, and 16. Profit given is 30,000, loss 80,000, and 1,10,000 profit. So in this, we have to remove the abnormal part. So in first year, there is one abnormal part, which is loss of stock by fire, 40,000. It is abnormal loss. It will be added. So abnormal loss, 40,000. It will be added here. Then in second year, there is voluntary retirement compensation. It will not be paid every year. So 1,10,000. So just 1 minute. And then there is abnormal profit on sale of fixed assets. It will be deducted. So this is 70,000. This is 30,000. And this is 80,000. Okay. Done. Now we will calculate average profit. So average profit formula is total profit given. So 70,000 plus 30,000 plus 80,000 divided by 3. 1,80,000 divided by 3. So it is 60,000. And goodwill will be 60,000 into number of year of purchase is 2 years. So it is 1,20,000. Okay. So this is the quotient. Tell me, do you have any doubt here? If you want to take the screenshot of this solution also, you can take.
Sir, can you scroll down?
Yes.
Done, sir.
Okay. So next part is super profit method. Abdullah, you have completed?
Sorry, sir, your voice is not coming clearly.
You have taken the screenshot?
No, sir.
Why? I told you to take the screenshot.
Okay, just one second.
So you're just sitting, doing nothing after, like, I was silent for.
No, I mean I didn't hear you saying screenshot. Like takes the screenshot of this or something. Really a minute, anyways.
Everything, the solution also.
No, just show me the question 3.
Abdullah, what you are doing for this time? What you are doing? Tell me, like, after I have solved the question, after that, there is like 3-4 minute time, I think. In between, you are just sitting, seeing this.
I mean I mean you could say that.
ऐसे कैसे चलेगा?
I'm so
Okay.
sorry, sir.
Take the screenshot fast. Whenever I'm doing something and if I'm not explaining, just try to complete this, because we have very less time to complete the topic.
Yes, really. Done, sir.
Okay, so this is now super profit method. Super profit method is, you can say it is a method based on extra profit. Extra profit means there is a concept here in super profit method, goodwill equals to average profit minus normal profit. Means at present what we are earning and what we should earn. So let's say that in the market, people who have invested money, let's say 1 lakh rupees, okay, all of like related business have invested 1 lakh and they are earning 15,000 every year. So in 1 year, they are earning 15%, you can say, because on 1 lakh, they are earning 15,000. So every person is earning 15% per year. Okay. So this is normal profit for this business segment because everyone is earning the same profit. So this is the normal profit. Uh, it is not the exact. Someone is earning like 16,000, someone is earning 14,000. So on an average, you can say that people are earning 15%. That is the normal profit. Okay. Normal rate of return. Now we are earning 22,000. How much? 22,000. So everyone should earn, and we have also invest 1 lakh. So everyone is earning 15,000 and we are earning 22,000. So the extra profit we are earning, that is our super profit. That 7,000 we are earning, that is our super profit. So that's why goodwill equals to average profit minus normal profit. Now, sorry, average profit minus normal profit into number of your purchase. It will be better that way. Okay. This is the formula of super profit. Now, goodwill equals to super profit into number of your purchase. Actually, these are the things we have already written somewhere. Super profit into number of year of purchase. Number of year of purchase I have already explained. Super profit formula I have written. Also, I have explained. Average profit in the previous concept we have already discussed. There is only one thing left, that is normal profit, which is new in this concept, normal profit. So what is normal profit? It is capital employed, means how much capital we have invested in our business multiplied by normal rate of return, because everyone is earning 15%. So that's why normal rate of return is 15%. And if we have invested 1 lakh, then we should also earn 15,000. But actually we are earning 22,000. So 7,000 is extra profit. And if this 7,000 we will earn for 3 years, then it is 21,000 goodwill. Is that clear?
Yes, sir.
Okay. Now, what is the formula of capital employed then? So capital employed equals to assets minus liabilities. Take the screenshot of this. Then I will solve a question of this also. Okay, Maria, is there any like confusion, any doubt you are getting that something should be like this way or this way? Because you told me you have already studied this concept, but you need revision. That's why I'm asking this, that the part you were thinking, that is clear to you?
Yes, sir.
Okay. So if there is any question related to the topic, you can ask.
Okay, sir.
Just 1 minute. Yes. Done?
Yes, sir. Done.
Okay. So here it is. You can see the question. Question number 16. Uh, okay. 17. On 1st April 2016, an existing firm had asset of 75,000, including cash of 5,000. Its creditors amounted to 5,000 on that date. The firm had a reserve of 10,000, while partners' capital account showed a balance of 60,000. If normal rate of return is 20% and goodwill of the firm is valued at, okay, that is a different question. No, no. Mhm. Okay, question number 15. Capital of the firm of Sharma and Burma is 2 lakh. And the market rate of interest is 15%. So that is also normal rate of return. Annual salary to partner is 12,000 each. The profit for the last 3 years were 60,000, 72,000, and 84,000. Goodwill is to be valued at 2 years purchase of last 3 year average super profit. So 2 years purchase of last 3 years average profit. First of all, we need to calculate the average profit. Okay. And what will be the normal profit? First of all, question number 15. We have to calculate normal profit. So normal profit equals to 2 lakh into 15%. It is 30,000. That is normal profit. Annual salary to partners. There are two partners, Sharma and Burma. So annual salary to partners is 12,000 each. Means every year they are getting 24,000 profit. How much? 24,000. So from average profit, we can deduct the same, or we can deduct it from every year profit. So 2,000 year 1, year 2, and year 3. Profit will be 60,000, 72,000, and 84,000. So minus 24,000, minus 24,000, minus 24,000. So every year we are deducting this, or we can deduct it in from the average profit. So 36,000, 48,000, and 60,000. Now average profit. 36,000 plus 48,000 plus 60,000 divided by 3. So average will be 48,000. Okay. 1,44,000 divided by 3. So it is 48,000. So 48,000, and normal profit is 30,000. So super profit will be calculated. Super profit equals to 48,000 minus 30,000. So 18,000. And goodwill will be super profit into number of your purchase, 18,000 into 3. Into 3. Or it is 3 years purchase? No, 2 years purchase of last 3 years average profit. Okay. Sorry. Into 2. So 36,000. So this is our goodwill. Okay. So tell me if there is any doubt, any confusion in this question for the concept of super profit.
No, sir.
Okay, there is one more question related to the same topic. In that, we have to come in reverse actually. If you see the question number 17, goodwill of the firm is valued at 24,000. Goodwill is given. Okay. And all other things we need to calculate on the basis of this goodwill and 4 years purchase. So I'm solving question number 17 also. Or you will try this, question number 17. Actually, it is a different question. That's why I'm trying. Let me try. Okay. So on 1st April 2016, an existing firm had asset of 75,000, including cash of 5,000. So total asset is 75,000. Its creditor 5,000. The firm had a reserve of 10,000, while partners' capital account showed a balance of 60,000. If normal rate of return is 20% and goodwill of the firm is valued at 24,000 at 4 years purchase of super profit, find average profit per year of the existing firm. So first of all, goodwill is 24,000. What is the formula of goodwill? So goodwill equals to super profit into number of year of purchase goodwill is already given 24,000. Super profit is not given. So super profit into 4 years of purchase. It is given 4 years purchase of super profit. So 4. So we can say super profit equals to 24,000 divided by 4. So it is 6,000. It is 6,000. Super profit we have already calculated. Now net assets or capital employed. Capital employed equals to total assets minus liabilities. So assets of the firm is 75,000, including cash. So yes, obviously we include cash. So 75,000 is the asset. Minus liability is 5,000. There is a reserve, but reserve is not deducted. Reserve is part of the capital, we assume. So 70,000. This is capital employed. Okay. Now, normal rate of return is also given in the question. Normal rate of return is 20%. So normal profit will be 70,000 into 20%. So 14,000. Now super profit we have already calculated, and formula of super profit equals to average profit minus normal profit. So we can say average profit equals to super profit plus normal profit. So normal profit in the quotient is 14,000. Actually, we have calculated it here. And super profit is 6,000. So 20,000. This is average profit. Okay, so this is a different question, but by this way or that way, we can calculate the answer: average profit, normal profit, super profit. If any one information is missing, we can calculate it by the help of some other information related to the formula. So this is question number 17. We have solved 2 questions of super profit. Tell me if you have any doubt or confusion.
No, sir.
Okay. So do you think that now you can solve the question?
Yes, sir.
Okay. The last method of valuation of goodwill is capitalization method. Last method is capitalization. The third case. Now, in capitalization method, there is 2 methods actually under this. One is called capitalization of normal profit or capitalization of average profit. Normal profit or average profit. And the second is capitalization of super profit. Capitalization of super profit. So under capitalization method, first method, we need average profit for capitalization and also the capital employed. The formula of goodwill in the first method is average profit divided by normal rate of return. Divided by normal rate of return into 100 minus capital employed. Or you can say actual capital employed. Okay. So this part is called capitalized value. Capitalized value minus actual capital employed. Okay. Now, this concept is based on like how much capital we should invest in the business and how much actually we have invested. Like previous concept was how much profit we should earn and how much profit we are earning actually. So difference between that two is super profit method. Okay, and number of your purchase we have used to multiply. Here we are what we are doing like how much capital we should invest. We should invest is capitalized value, and how much capital we have invested is actual capital employed. So difference between these two is your goodwill. Okay, so this is very simple. The second method is from the super profit concept. So goodwill equals to super profit divided by normal rate of return into 100. This is super profit. But in this, you have to calculate super profit first and then do this. Okay. So any one method can be asked in the question. If it is not asked, then you will apply the first method, capitalization of normal profit, not super profit. It will be used only if it is asked in the question. Is that clear?
Yes, sir.
Okay. Now, I will not solve this question because two question I have solved for super profit, one question I have solved for average profit. So you should solve one question in this method. So solve question. I will give you a simple question. Solve question number 21. But right now in my watch, the time is 8:18. Okay, you have to complete it in 12 minutes. Means up to 8:30 you have to complete it.
Okay, sir.
Okay, so do it. Abdullah,
Yes, sir.
solve this question fast. If you complete it in 5-7 minutes, then it will be good. Because this is very small question. So 12 minutes is, I'm giving you some extra time. But if you complete it fast, it will be better. Do it. I will be back in 2 minutes. Yes, what you have messaged me, Abdullah. I don't know capitalization method.
No, sir.
So what I am explaining from that time,
So that super profit method, right?
are you really focusing on the class or you are like watching reels? Can you please turn on your video? Abdullah, from now on, you have to open your video. Actually, because I'm not believing that you are focusing on the class. So whenever you are taking the class, you have to turn on your video. I have explained a full concept of capitalization method in like 5-7 minutes time. And then you are saying that you don't know capitalization method. So what I have written here, this capitalization method, generally we don't like pressurize the students to turn on the video. Like if this is your performance, then yes, you have to turn on your video. It is like that you are doing something else. You're not focusing on the class. I have explained the topic. I told you to solve the question. You told me yes. And then you're saying that you don't know the capitalization method. I have explained two methods of capitalization. And this is not good.
Sorry, sir. No, I'll try to stay focused from the next class, but
No, first, actually, no, I don't believe in these words now because you have said this so many times and you are doing exactly same thing always. Okay. So you have to turn on your, if you're not able to do this in this class, okay. But from the next class, you have to turn on your video.
okay, sir.
Sir, done.
Okay. So how much you got?
1 lakh.
Okay. Can you tell me the formula that you have used, the amount in the formula you have written?
I just took 3 lakh, which was given as annual profit, and I divided it by 12 by 100, and then I multiplied it by 100, and then I canceled both the hundreds, and then I found it.
What? Okay, let me write this, what you were just saying. You have done like 3 lakh divided by 12.
Yes, 12 by 100.
12 by 100. And here you have written 100.
Yes,
Okay. And then
minus the capital employed,
what is the
which
amount?
was 24 lakhs. I mean, I took the assets and liabilities, and then the answer was 24 lakh.
24
But
lakh. 36 minus 12. Okay, fine. Now, problem is, if you do
yeah,
this,
it's coming in negative. That's why I didn't try.
okay, so do you think what is the problem? What can be the problem here? Because answer should be positive. Goodwill cannot be negative.
We won't write capital employed.
First of all, the formula, if you have seen, it is average profit divided by normal rate of return into 100. This 100 is for removing the percentage here. So 12 by 100, that is not correct. It is 3 lakh divided by 12. That's it. Into 100. So it will be 25 lakh. Okay.
Sir.
So this is the solution. Okay. So this is our capitalization method. We have already covered all the topics. One question for super profit actually. Actually, super profit question I don't have right now. In your book, maybe it will be given. So please try to solve that question. Okay, as homework you can say. Okay, so tell me after this, because we have completed the 2 chapters you told me, the fundamental of partnership and the goodwill. So we have completed these two. If you have any doubt or confusion in these two chapters, then you can ask question. And if not, then we should start a new topic, any new topic that you want. On 14th, your examination is scheduled.
Yes, sir.
Okay. So it means like after. Okay. So tell me any topic, any chapter name.
Sir, can you explain the financial activity and cash flow?
Cash flow from financing activities.
Yes.
Okay. But you said that you have completed cash book.
Yes, just for revision.
Okay. Cash flow from financing activities. Okay. Cash flow from financing activities. The thing is that in financing activities, we include all the cash transaction which is related to like getting funds, procuring funds from different sources as a loan. Okay. So let's say in financing activities, first we receive money and later we have to pay money. It is different from investing activities because in investing activities, first we pay money, pay amount, invest amount, and then we get something in return. So in investing activities, first money is going and then it is coming. In financing activities, it is coming first and then after it will go like in repayment, interest payment, dividend payment, or something else. Okay. So financing activities is related with the change in capital structure. If there is any long-term borrowing of the company, if there is capital, share capital, debenture, change in these things, then it is related to financing activities. Okay, so let's say you remember there are like sides of balance sheet in financial statement.
Sir, can you repeat?
Do you remember the side of balance sheet in financial statement?
Yes.
Okay, can you tell me the side's name?
The shareholders' funds and all that.
That is a heading. I'm asking the
Oh,
sides. There are only two sides in the balance sheet. There are two sides or more than that?
like the current year, previous year part.
Yes. Your voice was very slow. Can you repeat?
The current year, previous year part.
No, no. Okay,
Oh,
11th.
assets and liabilities.
Yes, assets and liabilities. One side is called equity and liabilities, and the other side is called assets. Okay, so under equity and liabilities, there are three headings. Now you can tell me the headings name.
Shareholders' fund, reserves, and no, non-current and current liabilities.
Shareholders fund, uh, non-current liabilities, and current liabilities. Okay. Now, current liability, we don't have anything like we don't have to do anything with the current liability. Okay. But if there is any cash credit, bank overdraft given, we can use it here. Now, shareholders fund and non-current liabilities. In this, there are some subheadings also. Yes. Do you remember the inside item? Under shareholder fund, one is share capital and the second is reserve and surplus. Under non-current liabilities, there is long-term borrowing. Long-term provision, deferred tax liabilities, and at the end, it is other non-current liabilities. So first of all, while preparing the cash flow from financing activities, what we have to consider means from the items from which we can get funds. First of all, provision is a non-cash item. So if there is any change in provision, it is not considered in financing activities. Deferred tax liabilities we never consider in cash flow statement. Other non-current liabilities also not included. So only long-term borrowing is included. Okay. Here in shareholders fund, there is two: share capital, reserve and surplus. So reserve and surplus include the profit of the business. And profit is always kept in the business. If it is increasing also, then it is profit of the business. We don't have to pay anything in return. Okay, so there is only two items for which we have to consider these two only in financing activities. So in share capital, it can be equity share, it can be preference share. In long-term borrowing, it can be long-term loan and it can be debenture. Is that clear?
Sir, where does security premium, where does it go?
Security premium is part of reserve and surplus. But that is along with share.
Okay, sir.
Okay. Now, if we are considering equity share, so either equity share will increase or decrease. Yes, preference share will increase or decrease. Long-term loan will increase or decrease. Debenture will increase or decrease. Only these can happen in the quotient. There will be two balance given in the quotient. It is like this and this. Now, if let's say equity share is given, 5 lakh, and here it is 7 lakh. Now tell me, what is the reason behind increase in equity share? What can be the reason behind increase in equity share capital?
They're giving out more shares.
Means we are issuing more share, we have sold some more shares. Now, if we have sold some more shares, so we will receive money. And as per the concept, if you remember, in the batch class, I told you that share can be issued at par and premium. Means 10 rupees share can be issued for like 12 rupees also, and at par means 10 rupees also. So if it is issued at premium, then you have to consider the premium amount also. Now, there is a difference of 2 lakh. So we can say that company have issued 20,000 shares of rupees 10 at 12. So in the quotient, if security premium reserve is also increasing, and then there is no information about like this is not written anywhere. Let's say security premium reserve is, in the beginning it was 1 lakh and now it is 1,40,000. Okay, so if these two information is given and there is no other information, this is not written. What is the meaning of this? It means that we have issued a share of 2 lakh at 2,40,000. So in financing activities, we will write this amount. There is an increase of 40,000 in equity share, and there is an increase of 2 lakh in equity share, and these two we have combined. So 2,40,000. So we have issued shares of 2 lakh at 2,40,000. So this 2,40,000 will be recorded as inflow, cash inflow in financing activities. Is that clear?
Yes, sir.
Okay. What if the equity share capital is decreasing? From 5 lakh, it is now 4 lakh.
They're not issuing shares.
Just one. Can you repeat now?
They're not issuing shares, or people have stopped buying shares.
Company have bought shares, you are saying?
Yeah, they're not issuing shares anymore.
Actually, there is no concept of like company have cancelled the share, but it can be bought back. Means company wants to decrease the control. In that case, the share which is previously issued to the public will be taken back from the public by different means. So it is called buyback of shares. Okay. So that is outflow of cash. It will be shown as outflow of cash. In the same way, if preference share is given, it is increasing, means we have issued the share, so it will be inflow. And if it is like decreasing, then it is a redemption of preference share. So the third is debenture, loan. If these are increasing, means we have taken the loan, we have issued the debenture. So again, inflow. And if these are decreasing, it means we have repaid the amount, we have repaid the loan or repaid the debenture. So it is outflow of cash, so it will be recorded in outflow. Okay. So these four are the types of thing that can come in the financing activities: equity shares, preference shares, debentures, and loan. Now, there are some income, sorry, not expenses related to these items. Increase, decrease, we have already understood. But there are some expenses related to this. Like if we issue debenture, we have to pay interest on debenture. If we take loan from bank, we have to pay interest on loan. If we have issued preference share, we have to pay preference dividend. And if we have issued equity share, we have to pay equity dividend. So these expenses are also outflow for the company. Is that clear?
Yes, sir.
Okay. Now, the thing is, how we will calculate this on the basis of date. A rate will be given, or the amount we already know, increase, decrease, after increase, decrease, the amount will be given. So the rate of interest or dividend will be given in the question. You just have to calculate the dividend amount and interest amount, and that will be your outflow. So it is based on the different question. Because if I will explain here that 5 lakh is the equity share and question is saying that we have paid 15% dividend. So we will calculate 5 lakh into 15%. But it is not complete information. They will also tell you that dividend will be calculated on the like opening balance or the closing balance. Okay. So if it is opening balance, then 75,000 is correct. And if it is closing balance, then 7 lakh into 15% we have. So this is how we have to like do it. Now I'm sharing one portion of financial activities also. Okay. Question number 34, you can see.
No, sir.
No. But I have shared it.
It's not visible. It came.
Take some time. Okay. Yes. Okay. So from the following extracts of balance sheet of EXE Limited, calculate cash flow from financing activities. Okay. Now here it is equity share capital. You can see 525 and 4 lakh. Actually, this is the previous year. This is the current year. So it is increasing 1,25,000. Yes.
Yes.
And there is also a security premium reserve. 225, 1 lakh. It is also increasing by 125. It means we have issued our share for 2,50,000. 125 increase in equity share, 125 increase in security premium. So total increase of 2,50,000. So it means we have issued our share for 2,50,000. Is that clear?
Yes, sir.
Okay. Now the date of issue is given everywhere. You can see. Now you have to tell me that what we should do in preference share capital. What is it? Inflow or outflow?
Flow.
Outflow? Is it outflow?
No, it's inflow.
Don't be confused. I'm repeating my question. It doesn't mean that your answer was incorrect.
So it's outflow?
Yes. That's what I'm taking confirmation. It doesn't mean that I'm asked, yes, your answer is outflow. So you are thinking, sir is asking again. So maybe it is incorrect. So no, outflow is the correct answer. 5,50,000 was the opening balance and 4 lakh is the closing balance. So what does it mean? It means we have refunded the money to the shareholders. So 1,50,000 is outflow. Now there is some additional information in preference share. So point number 3, preference shares were redeemed on 31st March 2020, means we have refunded the money on the last date at a premium of 5%. So 1,50,000 was the exact value, and premium of 5% means 1,50,000 plus 7,500. So we have paid 1,57,500. Okay. Is that clear?
Yes, sir.
Okay. Next is, okay, actually 10% preference share capital is also given. 10% is the dividend rate of preference share. So what do you think? It will be calculated on the beginning amount or the last amount?
Last amount.
Means 4 lakh, you are saying?
Yes.
Okay. No, it will be calculated on 5,50,000. Okay. Because we have redeemed the shares at the last date, means we have utilized full amount in full year actually. So 5,50,000 is used in like current year, the whole year. So 5,50,000, we will calculate the dividend. Then there is 12% debenture. In the beginning, it was 3 lakh. At the end, it was 4 lakh. So there is an increase of 1 lakh. Now, in additional information, 12% debenture of face value 1 lakh were issued on 31st March 2020, means on the last date. So again, that is inflow, means we are issuing the debenture, but this 12% rate will be calculated on 3 lakh, not on 4 lakh, because 1 lakh is issued on the last date. So we will pay interest on 3 lakh only. If it is issued during the year, then we will calculate for some part of the year, but it is issued on the last date. So that's why in current year, there will be no interest payment for 1 lakh. So only 3 lakh will be used for calculation of interest. Is that clear?
Yes, sir.
One more thing is written here, that interim dividend on equity share was paid. Interim dividend is paid during the year. So it will be calculated on this amount because equity share is also issued on the last date. Means this 1 25 extra that we have issued on the last date is not utilized for, not used for calculation of dividend. So on this 4 lakh, we will calculate dividend. Is that clear?
Yes, sir.
Okay. So if we have to solve the question, so it will be inflow and outflow. First is equity share. We will write proceeds from issue of equity share. It is 2,50,000. How we have calculated this? So increase in equity share is 125 and increase in security premium is also 125. So total 2,50,000. Then interim dividend on equity share was paid 15%. So 4 lakh into 15%, it will be 60,000. So interim dividend paid 60,000. Then 10% preference share capital, it is decreasing. So redemption of preference share. I told you it is redeemed and at 5% premium, so 1,57,500. 1,50,000 plus 5%. So 157. And preference dividend is paid. So preference dividend, it will be 55,000. Okay, the next is 12% debenture. We have issued debenture. Debenture of 1 lakh we have issued. And there is interest on debenture. 3 lakh into 12%, it will be 36,000. So total here is 3,50,000. And here it is 3,08,500. It will be 41,000. This is cash flow from financing activities. Tell me, is this clear?
Yes, sir.
Any other topic, chapter? Clear your all doubts so that there will be no issue.
Sir, can you explain retirement of a partner during the year?
Retirement of the partner during the year.
Yes.
So what is there to explain? Tell me. If a partner is retiring not at the end of the year, not in the beginning of the year. He choose any date which is during the year, then it is retirement of the partner during the year. What is the problem at that time? Okay, have you studied death of the partner chapter? Yes, I think you have studied.
Yes.
So in that chapter, we have studied like concept of calculation of profit up to date of death.
Yes.
Also, we have calculated the amount payable to retiring partner, and we have included different items like interest, salary, or anything that is payable to deceased partner is calculated for previous year and up to date of his death. So we have to do the same in retirement also. If it is during the year, then we have to pay everything to the retiring partner from previous year to up to date of death, date of retirement. So that is how it will be done. It is same thing. If there is any specific doubt in that concept, you can tell me. I will explain. Like profit calculation, there is interest calculation or salary payment or amount payable to retiring partner, how it will be calculated. You can ask me anything, I will tell you.
There was a question I couldn't understand, so I wanted to ask about that.
Can you share the question?
Okay.
Let me see if I have the same question. Retirement. Okay, it is question. The capital amount is 11 lakh, 11 lakh 40,000 and 7 lakh 60,000.
I'll find the question. I
Yes,
had a
find
doubt.
the question and tell me the amount. Actually, no. First, can you confirm the question just? The capital account balance that is given is A 11 lakh, B 11 lakh 40,000, and C 7 lakh 60,000. Is this the question you are talking about? Because I have this question in my book.
Sir, your voice is breaking.
Okay, I'm saying now it is clear.
Yes, sir.
I'm saying that A capital is 11 lakh, B capital is 11 lakh 40,000, and C capital is 7 lakh 60,000. That is the question.
No, sir. It's from my
Is
textbook.
it is different?
Yes.
Okay, can you tell me what is the amount of capital?
Retirement and profit was determined at 7,20,000.
Profit determined at
7,20,000.
that is not the question. Okay, can you share the question?
Okay, sir. Give me 2 minutes.
Or read the question. I will like note down the important parts.
Okay, sir.
Yes, tell me.
Yogesh, Naresh, and Pavesh are partners in a firm sharing profits
Little
in the
slow
ratio.
because I have to write and you have to like speak. So you have to go slow. You
Okay.
know that writing
Yogesh.
speed cannot be equal to speaking.
यार अभी तक खत्म नहीं हुआ बहुत ज्यादा हो रहा है मैं जा रहा हूँ
What happened? Abdullah, you were saying something? Okay. Tell me, Maria.
Yogesh,
Yes.
Naresh, and
Naresh
Pavesh
and
and
Bhavesh.
Pavesh
Okay.
are partners in a firm
Partners in a firm.
sharing profits in the ratio 2
Sharing
is to
profit
2
in
is
the,
to 1.
okay, 2:1.
Naresh retired
Okay.
on 1st October.
Yes.
Okay, and then in terms of the partnership deed,
Yes, yes. Next.
financial statements were prepared
Okay.
as on date of retirement.
Okay, just one. What happened, Abdullah? You just said something.
uh, I'm so sorry sir my mic was unmuted and I didn't realize that I was speaking to my mom
Okay. Okay, Abdullah, one thing also that these topics I'm taking doubt. Actually, if you want to leave, you can leave because maybe some of these things you don't understand because this is a separate topic. So since
actually
asking
to be
something,
honest I wanted to leave because I have to pray also
okay. So yes, you can leave.
okay thank you sir
Okay, because
bye
actually the doubt session maybe that's why I'm saying you to leave because that is not the actual topic going on. She's asking doubt. So, okay, you can leave. Bye.
okay okay sir thank you bye
Yes.
Financial statements were prepared as on date of
Yes.
retirement,
Okay.
and
Next.
profit was determined as 7,20,000.
Okay. Profit is 7,20,000. Financial statement is prepared on date of retirement, you are saying. Yes.
Yes. And then
Okay.
there's for EBIT, past journal entries for distribution of profit for the period. Second bit,
Okay.
past journal entries if loss of 3,600 was incurred.
Okay. There are two cases in the question. Can you repeat the first case?
Past journal entries for distribution
Yes.
of profit
Yes.
for the period.
Okay.
And the second one is past the journal entries if
Yes.
loss of 3,60,000 was incurred.
3,60,000 loss.
Yes.
Okay. So now this is the question. Actually, same thing. Do you remember the journal entry at the time of death that we pay to the retired deceased partners?
Executor debit to partners.
No, no. At the time of like profit, we have to give to the deceased partner. So do you remember that journal entry?
No.
Okay. So whatever profit they will give you in the quotient, okay, that profit will be, this profit, we have to calculate the share of retiring partner. Okay, so it will be 7,20,000 into, who was retirement? Naresh, 2 by 5. Okay, can you calculate this amount, 2 by 5? Yes.
2,88,000.
So 2,88,000. We will pass the journal entry with this profit and loss suspense account. Profit and loss suspense account debit to Naresh capital account. It will be 2,88,000 in simple way, where the new profit sharing ratio is also same as the old profit sharing ratio. Means only we will remove the retiring partner share and all the other parts are same. In that situation, this will be the journal entry. Okay.
Okay, sir.
Okay, if it is a loss, then this entry will be reversed. Naresh capital account debit to profit and loss suspense account. So for 3,60,000 that you just said, it will be 1,44,000 entry. Okay.
Okay, sir.
Okay. Now, if there is any change in the like profit sharing ratio, then the journal entry will change. It will be again the continuing partners like Y and B. Yes, Yogesh and Bhavesh. So Y capital account debit, B capital account debit to N capital account. Okay. And the share 2,88,000, it will be distributed in like gaining sacrificing ratio. Okay.
Yes, sir.
So this is what we have to do.
We don't have to open profit and loss appropriation account.
No, because there is no appropriation given in the quotient. Simply it was total profit given. Yes.
Yes.
Okay. So we will just distribute it. Actually, not distribute it. We will calculate the share of retiring partner. That's it. And that share will be given like this. The journal entry I have already told you.
Okay, sir.
So this is the concept. Generally, we write profit and loss suspense account debit to retiring partners capital account. That is the case. Actually, if you in my book, there is a detailed question for this. I told you that capital is given, balance sheet is given, everything. So let me see the question. If it is possible you to solve, then I will share the question. You have to do everything same, everything. Like if you have to prepare revaluation account, it will be same. If you have to prepare like distribute the profit and loss balance given in the balance sheet, it will be same. So anything, all the like adjustment will be same. There is only additional concept of this calculation of profit up to date of death. Actually, not death here. It is in my mind. I have repeated this so many times that I remember only death. So calculation of profit up to date of retirement of partner. You have to calculate that and pass the journal. Okay.
Okay, sir.
Yes. Any other question?
No, sir.
Actually, I am explaining things. Okay, whatever question you are asking, I'm explaining everything. But if you think that by explanation you are not getting points clear, okay, in that case, you can tell me. I will solve the question.
No, sir, I understood.
Okay. So eh, we have completed these two topics. Then the ratio is not coming in your exam.
No.
Okay. So what are the topics? Can you repeat once again? Actually, I have the list, but if you remember, can you tell me?
Comparative common size?
Okay, analysis.
Yes.
So
And
this you
then,
have already revised.
yes.
Can I ask you some question?
Okay.
Okay, what is the formula for common size percentage?
We take the amount and then we divide it by the base year, which is the total of
Okay, individual
by,
item divided by base item.
yes.
Okay. And what is the formula for comparative percentage? Like in comparative statement, we compare. So percentage change, I'm asking.
Yes, we take the difference of the years, which is
Yes.
called the absolute change, and then we take the percentage of that.
Okay. So in balance sheet, what is the base item in common size?
The total of liabilities, and then the total of assets.
Actually, total of assets and liabilities are same. So yes, total of balance sheet, you can say. Okay. In statement of profit and loss, what is the base item? In statement of profit and loss, what is the base item?
Sir, can you repeat?
I'm asking, in statement of profit and loss, what is the base item?
It's the same.
In a statement of profit and loss, it is same.
I didn't practice that part, but I know the concept.
Okay. In a statement of profit and loss, the base item is revenue from operation.
Yes, sir, now I remember.
Okay. Okay. So you have revised analysis. Good. Next,
Cash flow.
cash flow already done. You have done the operating activities, investing activities as well.
Yes.
Okay.
And
That
then
is
I
good.
have to revise heads and subheads.
Means financial statement.
Yes.
Okay. This is the second book, a second or third book maybe. So
Yes.
in accounting for share capital or debenture, there is no question.
No.
Okay. So in partnership,
Fundamentals, goodwill, change in PSR, admission, and retirement.
not death.
No.
Okay. If you have some confusion, then you can go through the question we have solved in death of partner, like time basis and sales basis method we have solved for calculation of profit. And then we have passed some journal entry at that time. So you can go through that for
Yes, sir.
retirement during the year. And one thing, always like revise revaluation account.